Hello and welcome to Pro Trader Strategies Market Commentary for Friday, September the 7th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, and even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with the economic data. Across the pond, not really anything major coming out that I can see that we really need to talk about. There's some couple unemployment rates and stuff like that across the pond, but they're pretty much in line with expectations. Nothing really to see there. But here in the United States, it's Unenjoyment Friday. That's what we used to call the unemployment data. First Friday of the month on the floor, the unenjoyment number, because it was pretty, generally a pretty crazy day. Anyway, what we were talking about yesterday with ADP, and don't really look at that number because it's not really a great reflection as to what the non-farm payrolls number is, and that showed up today. Non-farm payrolls came in at 201,000 hires, expected to be 191,000, so beat by 10,000 hires. Well, if we look at last month's number, they revised that one down by exactly 10,000. And that makes that a wash for the most part on this data point. Also, we got the unemployment rate uptick just a little bit to 3.9%. It was expected to be 3.8%. So all of that could culminate with the revisions and everything else, and more people looking for a job that may not have been on the unemployment line beforehand. Discouraged workers is what that is. Discouraged workers coming back into the workforce. Discouraged workers are not a part of unemployment. They may not have a job, or they don't have a job actually, and they are now starting to look for a job. So once they start applying and claiming unemployment again, then they come back into the unemployment limelight, I guess. For lack of a better word, I guess. And the, the average hourly earnings did finally uptick to 0.4%, expected to be 0.3%. Now, remember, we want to see some inflation in wages to help generate some more traction in the overall economy, which we haven't been seeing much of recently. This is a nice, at least, uptick for that data point. And that's about it for the economic data. We've got crude oil right now in negative territory, but right at the point of control, which is where the most time and volume has been spent. That's where the market has perceived value for crude oil. So this is where I was talking about when we get back down to these levels, we could probably see crude oil start to settle down in and around this area, okay? And then we've got gold futures. Yesterday, gold was trying to rally with the overall markets down. Today, we're starting to see a bit of a pullback, still above that 1,200 troy ounce mark. That is the line in the sand I've been talking about that the bulls are going to want to defend and stay above there. It's just a psychological level. There's really no support resistance level there, but we know when we have those type of key numbers, it sticks in people's heads, and that creates a support resistance there. All right, Bitcoin continuing its slide, although it's pretty much unchanged, only down $12 on the day, but a lot of downward pressure with high volumes coming in late in the day. So probably some of the highest volumes we've seen recently in the last couple of days in Bitcoin. That doesn't bode well as far as I'm concerned. Now that we're back down to these levels here around 6,000, let's call it, you can see the volumes are starting to lighten up a little bit as people have already picked this as a spot of support and resistance. And now I think it's going to kind of wane a little bit when we're around there. It's going to be a wait and see. Same thing, similar to Bitcoin. As you can see, the volume up here is a volume node, but we've got the time node down here, which means they're accepting price down here, but nobody's putting their money where their mouth is, which is a little bit disconcerting to me. All right, the bond coming off quite a bit, over a point down on the day, but that's basically a reflection of the equities starting to get a little bit of a bounce. they really have no place to go. We have good economic data. That could be something where the Fed starts thinking, okay, maybe we could do another incremental increase in the interest rate. I don't think that they're going to. I think they're going to hold off and see how some of these economic data points come out. It's just not really, blasting the roof off. It's good economic data, don't get me wrong, but it's not robust enough to really continue to crank up rates as far as I'm concerned, and we're not really seeing the inflation across the board, which should be their mandate on increasing interest rates. All right, the VIX coming off just slightly today, still in the teens, but I would expect as the overall equities start pushing higher that we might see a little bit more weakness there. Now, Dow Jones being the one that was kind of held up yesterday as NASDAQ was falling out of bed, today we're starting to see a little bit of a flip here. We've got the Dow Jones down just slightly with the NASDAQ up about 24 points. A lot of this could be a bit of profit taking. We did settle above the 61 Fibonacci, and I've talked about that. That is going to be a key line for the bulls and bears to fight over. As you can see, it acted as resistance on the way up and support when it kind of fell down here. Again, finding more resistance. It's a pretty solid number, and you can see that this node is starting to build at this area. So price is being accepted up at these levels. So it's not, it's actually a good thing if you're a bull. And we've gotten above that line today. It's looking like we've found a little bit of a bottom here. It's obviously not confirmed yet. We'll have to wait till Monday to see that, but you can see it came down, touched the 50-day moving average, and then peeled above that. We're above right now and near the highs of the day. Similar situation with the E-mini S&Ps. They managed to get at least very close to getting above there. Today, peeled down and back above and creating a nice little doji at the bottom of this little move. Obviously, again, not confirmed. Would need to wait till Monday in order to see that confirmation. If it were to finish right here, that's what we would be looking for, a settlement above the high of today, or a breakdown and settle below the low of today. This is the daily chart of the E-mini S&Ps. A lot of stuff going on overnight with Tesla and stuff, and I think that caused a little bit of the broader market to come off a little bit as well. You can see overnight inventory started to get short when a lot of that information was breaking, and then on the open with the good economic data, we saw the market starting to rally. I talked about this. We are near the highs of the day. We have encompassed the entire day, so there's not a whole lot to worry about there. One thing to note, starting to look a little bit toppy right now, but I don't really see this market really coming off late in the day on Fridays during the summer. I know Labor Day is behind us and it's really not summer anymore, but I think that we're still going to see some light volumes here on Friday for the next couple of weeks anyway, as people try and squeeze in those last summer days at the lake or at the Hamptons. We used to call it a rush to the Hamptons on Fridays. All right, now eBay, these are the trades that I've done. Now, if you guys remember on eBay, you can remember I sold some 36 puts on here and clearly did not work out very well. I let them put me the stock, so I am long eBay at $36 a share. I've been selling calls against it. Once I get put that, it's staying mechanical, right? I got put that stock at 36, started selling calls against it. Now I've rolled my 35 calls that I've shorted. I sold the 36 calls, rolled them down to the 35 calls, collected some more credit. Now I've rolled them out in time to the October to collect a little bit more credit. So in that, I rolled out my September 35 calls out to the October 35 calls. I didn't roll it up or down. I thought about rolling it back up to the 36s. But I didn't, and I also looked at rolling it back down, or rolling it down to the 34s to collect a nice chunk of premium. But it looks like it could be getting a little bit of a trough here, so I just went with selling the 35 calls in October, and I collected a total of, I believe it was around 36 cents on that, 68 cents. So I rolled the SEP to the OC and collected a total of 68 cents on that new credit. Now I've covered that whole distance from 36 to 35. It was very close. So I've locked in what looks to be a loss by being long at 36, getting short the calls at 35. If they were to, pull that stock away from me, I'd lose that dollar, right? Because I've locked in a dollar. I've collected over $1 in premiums to cover that gap, so I'm not going to be hurt. It'll be close to a scratch, if not maybe a slight winner, maybe a scratch after all of the commissions and everything else. But at this point, I'm happy with that, rolling that out in time, collecting more credit, staying mechanical, continuing to lower my overall break even, and waiting for this market to come back. It looks like it's wanting to come back now. Hopefully we can get above this Fibonacci level and back into the value area. Then I'll be very happy with that trade as well. All right, on to Tesla. What happened with Tesla? Oh my gosh, it fell out of bed. It was actually almost down 9%, close to 10% earlier this morning. Why? Because Elon Musk has gone off the rails. I don't even know what to say about it. I tweeted something out this morning that he needs to kind of step away and get back to creative. That's what he's good at. He's a creative genius. But when you're building a company, and like a car company, you need a lot of structure. When you're creative, that the right side of the brain is the creative side. The right side of the brain is the structural side, if you will. So he is more of a right side brain guy. I believe that's right. I'm pulling this out of my hat from my psychology days 25 years ago. So correct me if I'm wrong, but I believe the right side is creative. The left side is structure. And it's hard to cross over on those things. So I think he should walk away. He started calling this guy that he's been having a problem with, the submarine guy, all kinds of bad things. That guy's going to probably sue him. Then he goes online, Barstool Sports, and starts with Dana, the guy from the wrestling, started smoking marijuana, a blunt, I believe it was a cigar wrapper with marijuana in it, and got high. Not that there's anything wrong with that. It's legal in California. But you probably shouldn't be doing that when you're talking about your company as the CEO. I don't care what you do on your own time, but when you're trying to represent your brand, it's probably not the best thing to show your investors as far as I'm concerned. And then on top of that, the chief accounting officer walks away after 1 month at the helm, and that to me signals bad things for the accounting side that he probably felt he couldn't fix and did not want that on his resume. That all the catalyst for this drive. Having said all that, I ended up covering my Tesla trade that I put on just yesterday, if you guys remember, with this Tesla. I put on the 350, the 350 calls that I got short in October. So I sold those October 350 calls in there for $3.15 just yesterday. With this big drop today, I decided to go out there and I covered them for $1.37 in there. So that was on the market move this morning. I decided you cannot beat that kind of trade. I'm not going to write it out. I don't care if it goes to zero. I am out of that trade. One day in that trade, and I'm well over 50% of my max profit. I'm out. I don't care if this market goes down. I didn't try to pick the bottom. It just happened. Walking away out of my Tesla short calls. Still long those puts, but out of those short calls for a nice little trade on one day. And that's about it. If you haven't checked out yesterday's webinar or weren't able to see it, go to Pro Trader Strategies. It's on defending strategies. I talk about this all the time. It's like that eBay. Staying mechanical is the best thing we can do in order to be profitable. And that's exactly what I'm doing with eBay. I talk about how to set stuff up like that in this webinar. So go to protraderstrategies.com and sign up for that. All right? So if you can't take that, take it easy.